This stock can change early buyers' lives. This isn't financial advice, but my research suggests it's a good idea to buy as much as possible before November 29th. The company is Establishment Holdings, ticker symbol ESTA, and they do plastic surgery, basically breast implants. The revenue is about $50 million, up 20% year over year for most recent earnings. And the guidance was raised for full year 2025. So it's a British Virgin Islands company, which isn't where you'd expect a lot of medical devices companies to be headquartered, right? You'd expect maybe Cambridge or San Francisco, but it has a 70% institutional ownership, and it seems like they're generating customers, income, revenue. So let's take a look at the chart. Let's look into how this company is legitimate and a little bit about the history of this industry. All right, not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is Establishment Holdings, ESTA. Very solid earnings reaction here. There's that less, than stellar, but still a beat. It's still a loss on that earnings per share, but notably a very minute drawback here. So a couple green days, and then this was actually the day before the big SPY down day, which we just recently experienced, and holding in there. So even as the SPY dropped on Thursday, this company was doing all right. So it's not super correlated to the SPY. That's sort of obvious, given that it's whatever it is, $20 million a day stock, something like that, a little less than that. So it's definitely small. You can definitely put 200K in with the click of a button. A lot more than that, you really ought to be a little cautious. And on a 5-year chart, it's basically gone sideways, up and down and up and down. And most recently, some accumulation before this earnings reaction, and then the earnings reaction was good. So definitely a big breakout over this base. We're talking about a very small company, but this could be an important change of character. So we'll see how it holds. 70 is pretty important, just a lot of resistance, buyers and sellers. Not actually that they hold the stock, because it's been 2 years since then, but just that they recognize this price level as a battleground, really, to see if it's really worth that much. So we'll get there, but in the meantime, you can buy it off of 60 and change. So just about here, 60 actually itself would be a pretty good risk level. You are risking, $4 at this point. But the idea is risk 4, make 15 or 20. So if you want to have a lesser risk, that's fine too. You just risk, one of these lows a couple days ago's low would probably be pretty reasonable. It's also coincides with maybe this open a couple days after that first earnings. So those are the spots to buy it. If you only risk, yesterday's or Thursday's lows, this is actually Wednesday, sorry. It's a little confusing because this chart also shows Sunday futures, which is going to open today, not yet, but I'm going to stop making excuses and just show it right there. 63 pretty much on the dot you can risk. So risk $1 and go for 10. That's a lot cleaner, probably high probability than risking $4 and going for 20, which is even less of a ratio there, right? 1 to 10 versus 4 to 20 is 1 to 5. But whatever you end up going with, just make sure you stick with your risk level. So that's enough about the chart for now. Just to double click on what this company is up to. They're not anything that is associated with some little penny stocks. They do operate in 90 countries, so it's possible this British Virgin Islands domicile is just convenience or accounting practice that's common for companies that operate in a lot of countries. I'm not 100% sure or even 90% sure on that. But I do know that this revenue is solid, 50 million, up 30% or more. Not really super sold by 200 patent applications or publications. I mean, it's good, but who knows, right, if they paid for some of those publication research to get done in the first place. But don't get me wrong, it's definitely better than not having it. And launching implants in the US sounds, I mean, it's the biggest market. I don't know if there's anything particular about these implants. But they have some cash, they reaffirm guidance, they're doing everything that a real company does. And they do have this institutional ownership from, I believe I've heard of this company or seen it several times. It would be great to have that a little bit higher to feel super comfortable. I mean, 90% is a lot, but some of these biotech companies that are really good have, institutional ownership of 99%. Now, with that said, there's also some biotech, this is actually a medical device company, so I should distinguish between them, but I'm not really going to, because for our purposes, it's pretty much the same, if we're being honest. Intellia Therapeutics, 94%, which is strong, kind of similar, though, to Establishment, ESTA. So ideally, you have 99%, and I know I'm harping on a number that maybe isn't super important. See, this is also like 90%, 88%. And the reason I'm just bringing these two companies up is they're the two recent most scarring healthcare-related stocks. QURE with that significant down move, and then this CRISPR genetic stock with a significant down move. So be careful, but I think this is a good play right now, ESTA. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. We'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.